Girl Scout cookie sales pitches and taxable income confusion. This is Ken Boyd with the Accounting Accidentally Substack channel. I have to sell 300 boxes. Sophia gave me a serious look as I glanced over her shoulder and waved at her mom, the waiting SUV in the driveway. I got my checkbook and I scanned a list of Girl Scout cookies. She was nice enough to point out a few of her favorites, which I ended up buying. And then she handed me a second form. Can you also buy some cookies for my sister? She's sick and couldn't go around the neighborhood. Sold. Wrote out two checks for two separate orders. So it turns out that a cold stare and a hard close was an effective sales pitch. Hopefully, my $18 will generate some income for the Girl Scouts. And as we approach tax season, the most wonderful time of the year, it's a good idea to talk about confusing tax topics. And one that I always come across is the phrase taxable income. More than one type of taxable income. When most people think of quote income, they're thinking of earned income from a job or an investment. For example, employees earn wages on W-2s. They're reported there. Freelancers earn income reported on 1099s. Interest and dividend income and capital gains and or capital losses are reported on various tax forms. They're versions of the 1099. So we all get this income, it all gets reported. But there are other types of income that are also taxable, which is really the point of this discussion. Most taxpayers rarely have to deal with other sources of income, the ones that I described below, but they may impact you occasionally. The first is understanding the gift tax. So the tax code allows taxpayers to gift or give away a limited amount of money each year, and there is no tax on the gift to the person who is doing the giving. If you stay within the limit, you don't have to file a gift tax return or pay taxes on the gift. So how much can you give away? In 2024, the gift tax exclusion is $18,000, meaning that you can gift up to $18,000 per recipient and not file a gift tax return. If you're married, each spouse can give away $18,000 per recipient without the gift tax, so it's double for spouses. So what's the strategy? What's the point behind gifting dollars each year? It reduces the size of your estate, which may potentially lower the amount of estate tax, which I discussed below, that a taxpayer may have to pay when he or she passes away. So you're taking money out of the estate by gifting each year. So let's talk about working with the estate tax. Here's a quote from NerdWallet. The federal estate tax is a tax that's levied on a dead person's inherited assets. The tax ranges from 18 to 40%. It generally only applies to assets in total over 13.61 million in 2024. So as you can see, the estate tax doesn't apply to most people. However, if you're accumulating wealth, gifting money each year can lower the size of your estate so you don't get near this 13 million plus number at the time of your death. Let's wrap up by talking about income tax confusion. Too many people don't find out about the tax impact of a transaction until the taxpayer hands them the tax return on April 15th, and then they're surprised. So let's avoid the surprise. If you check your inbox right now, it's early February, and you should have received a number of tax documents. As mentioned above, W-2s from work, 1099s for freelance work, and from investment income. So my suggestion is download those documents and check the amounts. Are they what you expected? For example, let's say that your federal income tax withholding on your W-2 is less than what you expected. Less in withholdings means writing a bigger check when you pay your entire tax liability when you file the return. So the message is talk to your tax preparer now, not in April, if you have one of these reports that doesn't fit with what you expected. Have the accountant run the numbers to determine the tax impact of what you weren't expecting. So food for thought. That's as far as we'll get right now. For other accounting and finance content, remember that you can go to Accounting Accidentally at Substack.